Okay, recording this video on Sunday, the 14th of June, 2020. It's just gone 1:12 p.m. Chicago time. Do hope you're doing well. Hope you're enjoying your weekend. And that was a pretty crazy week in the markets. We had a super big down day, 6% down on Thursday. Recovered a little bit on Friday. But I just want to talk about where we are on the indices, kind of bigger picture. Longer term charts, daily charts rather than like day trading or swing trading charts. And then got a question from Ken on bonds. I'm going to look at the bonds charts just really quickly. And lastly, for a little bit of fun, let's have a look at Bitcoin. So we're going to go through the indices first on the daily charts and then kind of roll down the time frames and just give you what I think is going on. So first of all, just a quick intro to my kind of standard chart setup. Left and right, we've got, this is the S&P 500 index in TradeStation. It's $INX for the daily chart there. Right-hand side, everything to do with price based on Beta Sine Wave. Beta Sine Wave calculates our cycles in 3 different time frames, and then based on those cycles and the price activity, we plot support and resistance lines on 3 different time frames. The lowest time frame are these super little light lines, support and resistance, the intermediate strength at intermediate time frames, and then the bold ones are the highest time frame. So uptrends painted in red, downtrends and weakness painted in white based on the breaks of those support and resistant lines. Then on the left hand side, everything to do with volumes. So we've got at the bottom here better momentum, which is a volume based momentum indicator, and then better pro-am on the price bars themselves. Blue bars are professional activity, yellow bars are amateur activity, and then we combine the two with price signals and volume signals into the combo indicator, and the background is painted red for strength and uptrends, and grey when we have downtrends and weakness. Black areas like this in the background just mean that we don't have confirmation between price and volume in terms of uptrends. So there we go. That's my usual little spiel on how the indicators work. So let's have a look. This is S&P 500 index. I'm going to use the S&P 500, the Nasdaq, and the Dow. You could do this on the futures markets. You could do this on the ETFs as well, but they're all showing very, very similar patterns. So what have we done in the last few days? Well, first of all, after the bottom, we rallied back. We went through the pullback resistance level, and I said we were potentially going to be caught by the next highest time frame here, which is what happened. So the next highest time frame comes in here, and we have a little bit of weakness. But at that point, I said 2,800 was the absolute key level. We need to get below that, close below that. If we break back up and close back above that 2,900 level, kind of all bets are off. That pattern is negated, and we don't go down, and that's exactly what happened. We kind of broke through that level and kept on going into a pretty strong rally. Testing back up, we got pretty close to the previous highs, a couple of 100 points away. With the Nasdaq, we actually got through the previous highs. I'll show you that chart as well. But now what we've done is we've broken these 2 different time frames, and this is Thursday, the big down day, 6% down, and then a little bit of recovery on Friday. So normally what happens once we busted through these 2 time frames, the low and intermediate, it means the market is strong, and we should go to make a pullback to end of trend in at least the lowest time frame. So my guess is we're going to do that, make that pattern in the next couple of weeks, and it's at that point where things cyclically kind of come together, at which point we can have a rollover. So to do that, we need these little thin lines here, which is the lowest time frame, to come down to 0 and cross. That'll be our support on the daily time frame, and then we'll go back and make a pullback to end of trend pattern. That hopefully will sync up with resistance on the highest time frame. So the support on the highest time frame is in, and it's based on these very thick lines here, and these need to come back up to 100 and cross, and that's when we'll have that resistance kind of come in. Now it looks like from the slope of these lines that that's a long way away, but you can't be sure of that because these can actually move very quickly to tighten up, to kind of get together. Similarly on the downside here, these can come round and go down very quickly and cause a support level to kind of come in. So from the look of that chart, you can't actually say, well, we're days away from making that support level and then kind of weeks away from making that resistance level. You just have to wait and see how the data kind of comes in and how quickly these kind of come together. The reason I'm saying that is because on Friday, the average trade size on Friday was extremely low for the entire day, which means that the amateurs were playing this. Thursday was like the 6% down day, was almost like everybody's been waiting for this retracement back up. We hit all kinds of round numbers and previous highs on different markets and so on. And so, the profit taking was just ready to go. And as soon as it kind of got triggered, everybody jumped on board saying, my God, I've got to get out now. And so the 6% down move day was severe. And then everybody saw that the next day. The amateur traders who were not trading during the day kind of saw that the next day and said, well, I need to get out. I wish I'd sold my whatever at the previous high back in February. That was my chance again to sell it again. I need to get the hell out of Dodge. So on Friday, the average trade size was very low. A lot of amateur activity kind of selling. And I'm just saying, watch out, because we could have a bounce based on that activity, because the amateurs are too early in terms of this turn. So that's what I'm seeing on my charts on the S&P 500. Now, I have to caution you, if these two levels get broken, so if we go below 2,800 in the next week, the next few days, the support level never comes in, we just crash through these things, then that pattern again is kind of gated, and it just means we're down, down, down. So 2,800 again becomes kind of a key level kind of down here. If we just continue on down, we broke these two resistance levels here, well, that pattern to pull back to end of trend just is not going to make it this time around. Tops tend to be slowly made. We tend to see pullback to end of trends on tops and amateur activity at highs and all this kind of stuff. Bottoms tend to be more spiky, or can be more spiky. So, the fact that we're going back up to make that pattern pull back to end of trend on these timeframes is more likely on the way back up, rather than having a spike up and a kind of a exponential move up, and then we just crash through those levels and on the way down. So again, 2,800, I'm watching that level pretty closely to see if we actually get kind of trapped here, caught at this level, we start to kind of rally back up. So Nasdaq, this is where we went through 10,000 on the Wednesday, and it was kind of classic. We came back up, tested to the high back in February, and you can see all those blue professional bars kind of up there, taking profits at that run up into 10,000 at those previous highs, and then selling it down here. It's interesting, the pattern between the Nasdaq and the S&P and the Dow is slightly different. You can see on the S&P we had exhaustion buy bearish divergence and we rolled over. And then on the way down here, exhaustion sell bullish divergence, and we rallied from there. This exhaustion buy is not kind of happening at the top of a channel or new highs or anything like that. It's kind of getting the move going. Then we've had bearish divergence and a flush pattern here. So for me, that kind of doesn't really count yet. We might have to see another of those, and we might be seeing that on this kind of move back up to test the 3,300 level, kind of up here, and surprise everybody to the highs. And it's like everybody's thinking, my God, even with everything that we see in the news, like the stock market is just incredibly strong right now, and again, kind of just trapping people into this uptrend. Nasdaq, I can't explain this. I've looked at the data on a daily basis, on a 14-40-minute chart and so on. We never got an exhaustion sell down here. Now, on the futures market, on the Nasdaq, we absolutely did, and the pattern looked more like the S&P 500, but we had our exhaustion buy bearish divergence. Even with that sell-off, we didn't generate an exhaustion sell signal. So just it is what it is. The data is what it is. It could be wrong, but it's just interesting that we've had that pattern. That's getting the move going. We're coming back up to kind of test those levels. So let's see. Again, this has the same pattern. We've broken through resistance on the low and the intermediate time frame. The support's in on the highest time frame. I think we're going to go put in a support level on the daily time frame, test back up to the 10,000, maybe move through it and so on. So it'd be extraordinary if that actually happens. Again, all bets are off if we start, kind of just slicing through these two resistance levels here. I know that's a long way away to move through this and that level to get a signal that, it's kind of, we're not going to do those test backups. But, what can I say? The data is the data. And then lastly, the Dow, for me, has been the most prescient, most interesting of all of these. That's what caused me to get out back in January of my equities. It was those blue professional bars, exhaustion buy, bearish divergence, kind of up there. Then we, exhaustion, sell, bullish divergence comes in, and we rally back up. We're under the lip here. And I always look at this pattern and think, that's a good opportunity as we come back up to that 27.5 level. Is going to be absolutely key. So again, the same thing. There are those two levels, resistance on the low and intermediate time frame, and we're still making support to resistance on the highest time frame. So cyclically, it means we're going to catch and kind of test back up and put in pullback end of trends, unless we just slice through to the 2400 level and it's just kind of all over Red Rover. So there we go. That's cycles on the daily time frames. Backing it down to look at the lower time frames is also helpful. So this is the 135-minute chart. This is on the E-mini, just day session only. And again, you can see on the 135-minute chart, we're through resistances on these time frames, intermediate, low, and highest time frame. We put in one little pullback to end of trend, and this was that turn that was going to be interesting when it was going between 2900 and 2800, and whether we continued down here at this point into a downtrend. And we didn't. We didn't just go into that end of trend that syncs up with resistance on the highest time frame and starts breaking supports. We never got that weakness. It never broke through that support, 2800. So it's just kind of kept on going up. And because we're through these three kind of resistances, we should make a pullback to end of trend. I know it's a nice little under the lip kind of pattern here. We've come back up to test that kind of level there, and it's Rambo patterns into there, and we just bounced exactly off that level. So that's a classic and under the lip kind of trade. But we need to see weakness. We need to start seeing supports printed, and we bust through supports on the downside to get that downtrend in, and it's not there yet. So most likely activity is support to resistance to play out here. So again, down a time frame to the 45-minute chart, same thing. The 45-minute chart showing us in an uptrend. Here we are in these we had our three different resistances. We didn't make pullback end of trend here. We sliced through there, but we could be caught now by this support on the intermediate time frame. And look at the blue professional bars kind of coming in at the lows here. So just like we had here, this was this critical level at 2928 where we started to break down, but the professionals stepped in at 2800 and caught it here. So similarly, we got to 32, we came down to 3000, and the professionals kind of come in here to catch it at this point, which will be a support on the intermediate time frame pullback level. So watch for Sunday night to Monday's activity. It could be a day where we just bounce off the weakness that we had, and we kind of come back up to test. Lastly, the 15-minute chart. So on the 15-minute chart, yes, we broke into weakness up here. So we kind of maxed out. We had some blue professional bars at the highs here. This one's particularly interesting. And then we broke through those levels into a downtrend here. But on this time frame, we got pullback to end of trend coming in that's syncing up with cyclical support on the highest time frame here. We got those blue professional bars picking it up as they kind of head down. We've got exhaustion sell, bullish divergence there. That's starting to line up to be an area that we could find support, and this could turn into an uptrend when we start to break a resistance level on the upside. So all I can do is say that's what I'm seeing on my charts. That's how I interpret it. It's extraordinary that we've come back up this far in this move, and that the Nasdaq kind of broke to new highs. We are in extraordinary times, but don't necessarily think that that's it, and that 10,000 was the golden ticket and we just drop off a cliff from there. I think we're going to go and play this out a little bit, and I think the amateurs were a little bit too early to catch this down move, and I think we're going to go through a shakeout kind of period where they're going to be busted out of their positions because they were just too early on Thursday and Friday to kind of get short. We shall see. So that was the indices. Got a nice message from Ken. Actually, it was a week ago, but he was talking about the bonds, and he says, what's happening with bonds? Can you give a little update. So you may recall on the 16th of April 2020, I put out a video saying, did the US bond market just top out? And that was because we had all these end of trend patterns go off here. So let me just remind you, this chart setup is looking at the interest rates, and we can use the cyclical activity on the interest rates to figure out whether rates are going up or down. So this is dollar FVX.X, TNX.X, and TYX.X. So this is the 5-year, the 10-year, and the 30-year. It's the rates themselves. And the rates are multiplied by 10. So the rate's currently here, 1.45%, 0.7% on the 10-year, and 0.3% on the 5-year. And you can see that these have been in a huge downtrend. We've got the background printed in grey for weakness and downtrends because we broke all kinds of supports. And this really important support we broke kind of down here. That's on the highest time frame here when we were back in 2019 into this big downtrend that we've had here. And the reason I put out that video was because we had these pullback to end of trends. That is a classic kind of left shoulder. You can get head and shoulders patterns on the way up and on the way down. This is an inverted head and shoulders where we get a left shoulder being made, and then the head is made when we have pullback to end of trend on the intermediate time frame, and that kind of signals the end, and then we start to correct out of that inverted head and shoulders pattern. And this is part of rippling through the time frames. We see these end of trends rippling through the time frames. So we've had this left shoulder print a pullback to end of trend on the lowest time frame. We're then going to make pullback to end of trend on the next time frame up, the intermediate time frame. So it's printed on the 30-year chart. You can see we're very close to crosses on the 5 and 10. So with the activity that we'll get over the next couple of days, we'll have those levels print, pullback, resistance, and we've got to run through the pullback to end of trend. So we'll see where those goes. But if the rates are going down, the cyclical activity now is kind of rolling over because we've had a rally from this end of trend into resistance on the intermediate time frame. We're going to weaken on the interest rates on the way down here, which means bonds are going to strengthen. Now, the bond market's been very tricky to trade over the last couple of months because we've been so range bound here. I've tried a couple of times to kind of trade this, missed the weakness here, but it kind of, for me, was just too sleepy and just got out of those positions because they never went anywhere. But it's the inverted pattern of the rates that you can see here on the 30-year chart. So we got pullback to end of trend, and we're now making pullback to end of trend on an intermediate time frame. So we're in an uptrend in bonds, and we've got to make that on the daily chart go pullback end of trend. Where that goes, who knows? But it could bust us above the top of this kind of channel here, 82s or something like that, and maybe we'll go have a look at this kind of spike high. But for the time being, we've got some strength in bonds kind of going on here as rates are continuing to come off. So just a comment about kind of cross correlations between different markets, particularly the bond market and the equity market. Just because the bond market looks like it's going to strengthen doesn't mean that the equity market is necessarily going to sell off. Yes, a lot of times those correlations are perfect. One's going up, the other's going down. But there's a lot of times when they both move in sync, they both go up together. So cross correlations are interesting and they're great when they work. And there's a lot of people following those cross correlations. When they don't work, there's a lot of people on the other side of the trade and they need to cover and reverse. So we'll see. Anyways, what I see in equities is potentially, another leg up, and in bonds, again, another leg up in bonds. So they just happen to be moving together at the same time. Cross correlations, they're kind of ephemeral. Sometimes they work out great. Sometimes they're just awful. So lastly, Bitcoin, our little friend Bitcoin. I've just pulled this up, BTC USD on a 1440-minute chart, which gives us kind of some good volume momentum data here. The 10,000 level is absolutely key, as if you needed me to tell you that. We've been playing with this level for forever. And we had one bust up through it, and then that huge sell-off down to 4,000, which was nasty. But all the blue professional bars kind of came in on that V reversal exhaustion sell. So that was an excellent place to get in. We've had a really strong rally back up to 10,000. The indicators are saying, we're still in an uptrend. We've still got strength kind of going on here. We've had no blue professional bars kind of take profits at the highs. We did have those blue professional bars coming at 12,000 back in, was that 2018? Yeah. Seems like such a long time ago. But anyway, so we're playing again with 10,000. It's not broken supports yet. We've got two resistances here. Yep, put in a little pullback to end of trend. We're coming up to some kind of cyclical resistance on the highest time frame. But again, no blue professional bars, no exhaustion buy at that point. So 10,000 is going to be absolutely key. We could just slice through that level and go into a really nice uptrend above it. And everybody's waiting for that. Everybody is waiting for that. So we're being messed around at the moment with these kind of false breaks and kind of false breakdowns. So everybody's looking at the same thing, saying, you know, when's the break going to happen? So we're winding up. It looks like a little bit of a wedging kind of pattern that we could break above here into a nice little uptrend. So just have to wait and see. So there we go. I hope that video wasn't too long. Equities, bonds, and Bitcoin. And let's see if I'm right with this week. We start to hold and rally back, because it might surprise some people. Hope your trading goes well this week.